Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 11th of October, 2018. Folks, I have been late all week doing these updates, but we're bombarded. It's a lot to take in with all the action going on in the trading. And if you're not in these markets, they're interesting, especially the financial markets. You know, we've had another big break today. If I was watching the Dow, and we were talking in the office, and I made a bet after 1 o'clock. I said, you watch what's going to start happening. Volatility is going to pick up. If you put on a 10-minute chart, you're going to see so many 100-point moves. It may have been a record within the day. They were just moving all over the point. You've got traders trying to figure out where the bottom is. You've got people caught in the market. They might be trying to come out. It's a wild time. And the gold broke out to the upside today. Now the question is, can the other metals go? And will that be a real breakout or another head fake? Foreign currency markets, well, they've been beating up the dollar, and now we're seeing tonight interest rates starting to gain back a little real yield. In other words, safe haven play, running to that in the end. Have we seen the worst of it? That's going to be the question. The charts you're now seeing in the boards, we're putting in high definition. You should see a lot of difference. I'd appreciate if you write us and tell us on our YouTube page what you think about it. It should come out easier to read. If it doesn't, I'd like to know. But you've had a big break. You were up until just... Take a look. This is a weekly chart. So this is September 28th, still in an uptrend. You corrected a little bit last week. This is October 5th. Now you've had the big break. It's sort of reminiscent of the beginning of the year when the market made a high, kept going higher. Just take a look. This was the end of 2017, and then you had the break. Will this end up also being another buying opportunity, or will the higher interest rates the Fed is imposing, the trade wars, scare traders off? Will the earnings forward guidance that we're looking for scare people off, as that's all going to start now? I would expect forward guidance to be scary, so we'll see what happens there. But you've had a heck of a break. You see this on the daily bar chart. Look at how this market has come down. And if you've misstepped on this, I mean, you couldn't afford to go to the bathroom if you were trading it in and out, and it's pretty violent. The trend clearly down. Lower highs, lower lows. And take away the past 2 days. You had that day. Where the trend came in alive was really taking out the low right there, and that low was, what was it, 28.66. So you came down through that low in the S&P, and that sort of did it. The market just let go all the way through, and these are big moves. These are not your normal everyday moves in the market. Where might the market find support and resistance? Well, that's what we're looking at. Frankly, it cut through the key moving averages. Some of the markets did try to hold the 200-day, but as a group, it's pretty difficult right here. This is the lower Bollinger Band. That's the upper. Look at the slope. This market got so far ahead and broke through everything just like a hot knife in butter that it just sliced through everything at one time. Momentum-wise, you're oversold. We have a market that might, for the weekend, want to take a breather. We have a market that's fallen out of bed. A lot of damage has been done on the charts. People that are looking for value stocks. You know, I was listening to Kramer and others that I listen to. Kramer is obviously quite colorful. But the points are there. And I was listening today to people on Fox, Bloomberg, and you pick a value area for certain stocks that you like, and that's what we're talking about, a stock index here. And that's what I think people are going to start doing. They're going to start coming into the market. Those that went into cash might do that too. The NASDAQ is acting better than the S&P. It's already back into and fighting to stay in its lower Bollinger Band in an oversold condition. It's going to have levels of resistance between the 18-day and the 100 here. We'll see what it does. When you get to the Dow Jones, you slid through everything. Run your 200-day moving averages. I don't want to have too many on here right now, but you're going to see that support in those are what you got to look at. Resistance now in the Dow. I'd be looking for this 25,450 area, 25,411 zone, right in here to be your problem area. Why? It's the combination of the lower Bollinger Band and the 100-day average of closes. The market's going to try to get back in within those bands very shortly. The Russell, still the embedded reading. This was the leader on the whole break, and it is suddenly trying to find its footing. So a number of the markets tonight are already rallying back into their Bollinger Bands. That does not mean they're ready to go up. It just means they're getting away from an extreme situation, and we'll see if some of the volatility starts to come out of the market. If you take a look here, this market did something the other markets didn't quite do at this price. You had a bearish crossover. And once you had the bearish crossover, honestly, this market, when looking back at it, it's just classic. It just collapsed as you had that take place on the chart. In the VIX, I know that I said back here that I thought the pros were selling this market, selling the calls in it, and they got stepped on. They got stepped on in February too. But if you go back to all the other opportunities, they've done very well. In writing the puts, they did well. That happens every now and then. That's the nature of options. Options get so thin. You know, futures get thin when you get a big price move one way or the other. Options get thinner. It's all a relative term. And when this happens, obviously, you're going to have to buy your way out of that market and figure out where you come back in and start the process over again. They got stepped on in that case. In the T-bond market, you still have a pattern of lower highs, lower lows. Yes, we're getting a correction. We've gotten a rally that's trying to get rid of an oversold condition. The trend has not changed. It is still down, which means higher interest rates are still here. When you take a look at the 10-year note, all you did is go from an extreme under the lower Bollinger Bands. Think of stock indices. You finally got a rally to the 18-day average, and that's where I look for this market to have a lot of trouble. I'm looking for pros to be selling this market into that 18-day average, which stops up and over that general area, looking to see if anything will continue. In TLT, you had a very big difference from these interest rate futures. You actually turned the swing line up. You got higher lows, higher highs. But more important, the market was getting to extremes here. It worked its way back into the Bollinger Band. It still had the embedded reading. Still has the embedded reading, challenging again these Bollinger Bands. Then today it takes off and it loses that reading. That's my point here. When you lose the reading, often price and the 18-day average make a run at each other. We'll see if that occurs. In the dollar index, you failed against the upper Bollinger Band. Momentum is turned back down. The first challenge of the 18-day average of closes could happen tonight. We'll see what goes on between that and the 100-day if they get down there. But right now, you're trendless in this market. And it's interesting because we had such a dramatic run to the upside in U.S. interest rates. And at the same time, you're doing better in the eurocurrency. The euro's got some things going for it against it. Obviously, the big against it is what's going to happen with Italy and its budget. The big positive is they look to me like they're on the verge of a deal if Miss May can get her parties to accept one. That's going to be the big toss-up. Could happen next week, so you've got to keep up with that. But it is impacting the euro currency. The British pound has gotten a bid because of it. The question is, was that the low if they come out with a nice deal for Brexit? I don't know what the word nice means, so I'm not putting that on anybody, and don't write me about that. Lower low, higher high, stuck in Bollinger Bands. In the Japanese yen, this was obviously, as the stock market fell, people started again buying the yen. It had a heck of a run to the downside. Take a look what happens when you lose an embedded reading. This was the day you lost it, right here. Often that means price and the 18-day average coming together. It gets there. You still don't have a new sell signal. You got a lower low and a higher high. And this is what the market did. Will it reach up to the upper Bollinger Band? It doesn't have to. It's already overbought and it's had a dramatic move. But there's nothing bearish on the chart either. Bitcoin fell apart today. The market's back down to a support zone. It's not under 6,000. It's in this sideways action. Was this a false breakout? Will it climb back into the Bollinger Band's the question. It is oversold. You have a pattern of a higher high, lower low. There's still a lot of people coming out, and that's one of the reasons this was down. There was a big paper written. Still, a lot of people don't think it has a value. When we get back to the spread of Brent versus WTI crude, you got back up, to 1033, an all-time difference on the current charts that I'm showing. I shouldn't say all-time high. I don't know what the all-time high difference is. And then it turned itself down. Lower highs, lower lows, and you're back to that neutral point. Why? Well, take a look at what's going on. The energy markets have come down rather sharply. We knew we had broken the uptrend yesterday. So that's where the market ended the trend, and today's the follow-through, and tonight you're just getting a small bounce out of it. Same thing true of the WTI. You're oversold. Here's a market that just ripped people's heads off. Gasoline got all the way up here to 215. You're back to 192 in a week and a half of trading. I mean, it's basically been a straight-down trade. Obviously, the market built in the rumor of Michael, built in an awful lot of people talking $100 crude. It's going to keep going. The U.S. stock market pulling its rug out from under it the way that it's done has to have gotten people concerned about what's going on. Is there going to be that demand for all the oil? And by the way, on the oil, if you read OPEC today, they said that the 150,000 recent barrels a day lost by Iran has been made up by Russia. In looking at the market here, you're still in an uptrend. Higher lows, higher highs, but you lost the embedded reading back here. I still say price in the 18-day average, good chance they'll run at each other. Want to remind you about our research. If there's ever a time you want to get the research in the different categories you want, in just those categories, you should take a look at what we do. I mean, our staff will be here late writing. One of the things I don't think you realize is we put out a lot of reports, like with David Hightower. He's orally on our trade platform. So he's talking to you, telling you throughout the day what he's seeing. We have our experts, be it meteorologists, for your grain traders, energy traders. We've got our own staff of all that, writing for commodity people. Take a look at it. Give us a call. You can go to our website. You can also click up here at any point. You'll see our carousel of free offers. Use it. I'm Ira Epstein. Have a good day.